Welcome to CEO Insights. I'm Marilyn de Guzman with INN. I'm speaking with Ken Armstrong, President and CEO of North Arrow Mineral. Hi, Ken. How are you?
I'm good. Thanks for having me.
Good to see you again. So I guess we can start our conversation with sort of the milestones in 2023 for the company. You've acquired and advanced a handful of lithium projects in the Northwest Territories. So why Northwest Territories?
Well, it's this area we know really well. Within our group, we've a lot of experience in exploration and finding deposits of all different types and evaluating them. And a lot of that work has been in Canada's north, in the NWT and in Nunavut. About a year ago, we had been focused on diamonds for quite a while, and we decided to make a pivot because we just saw what was happening in the lithium space. There was companies coming to the territory, picking up projects, sometimes paying a fair bit of money to acquire them, and we knew of opportunities that were available just for staking. And so we went out and did that to get ourselves to where we are now, where we have 4 projects between the 2 territories, but the 3 important ones are all in the NWT.
Right. So that's probably a good time to talk about those projects, what the status of those projects are.
Yeah. So the 3 that are kind of ready to go and ready to drill are the Staffney project, which we announced the acquisition of a year ago. And it's part of the Yellowknife pegmatite province, which is right in the Yellowknife area, as the name would suggest. And it's an area that we knew was available for staking. It had been mined previously, just after the Second World War, for tantalum and niobium. Lithium mineralization was noted, but never evaluated. So this year, through 2023, we confirmed those pegmatites were there, discovered a couple more, and got the permits in place to be able to build a camp and do the exploration drilling. It's located right on Great Slave Lake, so easy transportation access south of the lake to Hay River, where Railhead is located. And then at the same time, we said we were going to look at other opportunities, and we were looking at an area not too far from the diamond mines, where the geology is really similar to the Yellowknife district, and identified spodumene pegmatites on one of our existing diamond properties, which is now our LDG lithium project. And then at McKay, we confirmed there were some spodumene pegmatites there. It was open. We staked it. Did the work to confirm, like I said, those pegmatites are there. The mineralization is very good. Grades are good. So they're all kind of above that 1% Li2O number that you want to see when you're talking about spodumene pegmatite lithium deposits. It's kind of a critical threshold. And they're right at surface. So again, we did the work to confirm their locations and get the permitting in place so that we're ready to drill them. So that's kind of where we start this year. So this time last year, we didn't have anything. Now we've got 3 lithium projects that are that have good high-grade showings at surface that are ready to drill.
Mm-hmm. So can you give our audience a little bit more of an insight on what's coming in 2024 in terms of your exploration plans?
Yeah, so the goal will be to see those projects drilled, and that the timing of that is something that we're working on in the near term. We need to figure out funding of those projects, but there's not many juniors that are in this position where they have entered the lithium space and have acquired 3 different projects that have drill-ready spodumene pegmatites at surface that have never been drilled before, and that's the main reason that we think we should really be on people's watch list if they're interested in the lithium space.
Mm-hmm. So I'm gonna ask you sort of an overview of what your thoughts are in the lithium market, but I think maybe if you could talk about, you mentioned you're focused on lithium, but you have your diamond projects. Like, what's the status of that, and what should the investors know about that? Who's interested in that aspect of your business?
Yeah, I mean, we've spent about 10 years looking at different diamond opportunities in the territories. We have 4 or 5 different diamond projects. They're basically sitting in inventory for us right now. Tenure is fine. We've done enough work on them. There's no pressure to sort of spend money in order to maintain the properties. And we're going to wait for a diamond market to turn around and come back to us. It includes some pretty significant projects. Our Now Yet project, which is a joint venture with Burgundy Diamond Mines, who operate the Acadie Diamond Mine in the Northwest Territories. The Now Yet project is a very significant inventory, over 20 million carats in the ground there, but we can be patient with those. And instead, for our investors right now, we're really focusing on the lithium assets.
So with lithium, no, it's in terms of pricing, it's gone, through significant, I guess, changes in 2023 with the price decline. In looking into 2024, what do you see as, but how does this price decline affect your plans for 2024?
Oh, yeah, I mean, the price has come down a lot, and we're seeing that in the sentiment in the market right now. That is, perhaps could be considered an indication of a relatively new commodity. It's trying to find its footing and where it's going to be valued. So it's going to be quite volatile, and we're certainly seeing that. We saw the volatility on the price upside, and then through the last part of 2023 and into the start of this year, we're seeing the volatility on the downside. But it doesn't change the thesis for why we need this material. And it comes down to requiring lithium to be used in battery manufacturing for the electrification of the transportation industry, thinking about supply chains and trying to keep that product in North America so that we're using North American source lithium for those batteries. That all remains the same. And it remains the same that if we look out to 2030 and beyond, there is still a significant supply deficit for all the mining type projects that are on the drawing board right now. If they were to all get into production and all meet their timelines, which rarely happens in our industry, they're still looking at a 10 to 20% deficit for a supply deficit for what we need for the battery manufacturing capacity that's going to be in place at that time. So for this year, for us, the impact is just sentiment, and we need to finance, like I mentioned, and figure out how we're going to fund the drilling of these projects. And so we'll need to be careful on how we do that. One obvious way for us, we think, is to look for partnerships to help us with that funding. And we're also looking at other opportunities like selling some of our existing projects and seeing if we can monetize them, that sort of thing.
So we're here at BRIC in Vancouver. What's the key message you want the investors standing here to know about your company?
I think if for investors who are kind of looking sideways maybe at the lithium space, but they think, all right, we're at a low, now's the time maybe to make some investments, really North Arrow should be on their watch list. Like I mentioned, we have 3 projects with high-grade spodumene pegmatite showings at surface. They've never been drilled, and they are positioned with permits in place. In the case of LDG and McKay, a camp is already in place. They're ready to drill. And like I said, there's not many juniors that can say that they're at the greenfields discovery stage and they've got everything lined up for discovery this year, and we have that.
Well, thanks, Ken, for joining me today.
Well, thanks for having me.
And thanks, everyone, for watching. Join us again next time for another engaging conversation on CEO Insights. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. See you next time.